The Fiat Federal Reserve cut their federal funds rate another 25 basis points this week. Nearly all markets sold off on what was called a hawkish cut. We had a hawkish cut today. This is likely to prompt speculators who have outsized long exposure to take profits, which is forcing gold lower, said Bart Mellick, global head of commodity strategy at TD Securities. Quote, gold is competing with fixed income, and if the Fed is on a break from aggressive easing, then discretionary traders may want to lighten up. Well, often the typical dog and pony show from the Fiat Federal Reserve during rate cut cycles is to manipulate, or what they like to say, manage expectations, according to their shorter-term goals and forecasts. There will be cuts next year in 2025. The key question, of course, is how many, how fast will they come along, and under what kind of economic conditions they will fall. The Congressional Budget Office suggests that the interest on our exploding debt levels in the USA is going to eat about 1/4 of all incoming tax revenues by the time next decade, the 2030s, gets underway. The Fiat Fed's goal is going to be to continue having a wide gap between interest rates paid out to investors versus the real, higher structural price inflation regime we are going along in, with further fiat US dollar debasement to come. The easiest way to afford this unaffordable wall of debt and unfunded liabilities to come is simply to devalue our fiat currency as time proceeds. Structurally, this is the rubber and the unaffordable road that bullion is going to revalue against to come. Incoming President Donald Trump banged his keyboard this week, threatening tariffs on the European Union. And while both gold and silver have performed well in 2024 respectively, as both have done well in terms of nominal gains in virtually any fiat currency still valued under the sun, I look over at the commodity market and I can see that our morning cups of orange juice and coffee are beginning to threaten to go Coco Moon up levered price discovery walls. Meanwhile, the fiat US dollar Dixie has been strengthening, especially against its main competitor, the fiat euro rival, nearly falling to parity now. This is one of the strongest closes to the year for relative strength of the US dollar versus its competition, likely to finish at a high not reached in over past 2-decade high handle. Yet, like tens of thousands of you fellow stackers this week, we understand the fundamentals for why we're stacking bullion for the long term. And I was buying this week's spot price dip, as many thousands of you were out there too. On the other side of this short break, we're going to dig further into details of where we are in terms of spot price action and look at how two of the largest Eastern physical buyers are going to be surely also buying this week's price dip as well.
Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
The history of gold is vast and deep, and history is important. Part of a group with over 170 years of history in precious metals, Arger Heraeus has a proven track record refining some of the world's highest quality gold products. As one of the world's leading gold refiners, Arger Heraeus is on the forefront of cutting-edge technology. That's why when SD Bullion was looking to make a gold bar of the highest quality, we chose to partner with Arger Heraeus for their rich experience and history. Our goal was to create a bar that visually expresses some of the core values at SD Bullion, our love for our country and our faith. Introducing the brand new Cross and Flag Gold Bars, featuring a beautiful image of the American flag draped around the cross, imprinted upon 4 nines fine gold. These bars are available in 4 different sizes, and each bar arrives in assay with a unique serial number. Serial numbers 1 through 20 for all 4 size options will be available for purchase while supplies last. A separate listing for serial numbers 21 through 100 will also be available, and all other serial numbers will be shipped at random. The SD Bullion Cross and Flag Gold Bars, the first co-branded gold bar in SD Bullion history. And history is important.
So I went down to the water and found my fate, because I don't wanna be stuck in the good old days. That's when you say, I swear you ain't seen nothing yet. Found my faith, bowed my head for the blessings that come my way. There'll come a day, I swear you ain't seen nothing yet.
Exclusively at sdbullion.com.
The fiat US dollar spot prices for silver and gold sold off on this week's rate cut, with a tiny rally back to end the week's trading, but down overall for each metal. The silver spot price ended the week at $29.46 an ounce bid. More on the relevance of that number in a minute. The gold spot price closed above $2,620 an ounce bid, and with more relative strength versus gold on the week, the spot gold-silver ratio climbed higher to end the week at nearly 89. This is the gold spot price relative to its 200-day moving average over this full fiat currency era ongoing. Typically, in bullion bull markets, if you get the opportunity to buy when spot prices dip towards their 200-day moving average, you will likely end up happy you did over time. I say this because this week, the more volatile brother of gold, silver, fell and even traded below its 200-day moving average, which is at the moment hovering just above $29.50 an ounce. Shot-calling headlines were made this week, stating China would be declaring more official gold bullion buying in the face of potential further Trump tariffs to come. Goldman Sachs pointed out the obvious for anyone who's been paying attention since the 2008 global financial crisis came and got fiat QE covered worldwide. China has been, quote, systematically purchasing gold on the London OTC market during periods of CNY or fiat Chinese yuan weakness, highlighting years 2014 to 2016, 2018 to 2020, and 2020 until the present day now in late 2024. As the fiat Chinese yuan is likely to devalue further relative to the US dollar to come, one would expect China to begin declaring more official gold holdings it likely already has in opaque deep storage, stacked the last decade and a half or so. Admitted data already reflects the trend. China selling fiat US dollars and bonds, etc., buying and declaring more official gold bullion seemingly year after year. With the coming Trump 2.0 regime, one should expect this trend to not only continue onwards, but perhaps even quicken. Turning to India, the world's second largest gold buying market behind the Chinese. In the face of increasing near-nominal record spot prices in gold in India, it was reported this week that they imported 173 metric tons of gold last month in November alone. Big, if true. In fact, that would be the nation's largest tonnage importation of gold if the numbers indeed pan out over the month. India's CNBC 18 spoke of the news and a bit of controversy over that number. Have a look and listen.
That big headline coming in on gold imports. There's been a big surge in gold imports in November, which pushed India's overall imports and trade deficit to a record high. In fact, gold prices actually fell on a monthly basis in November, which means that the increase in imports was due to higher volumes. Manisha is standing by now with more on the yellow fever. Manisha, this is fast likely to become a problem for the government, is it not?
Well, it really could with the kind of numbers that we are working with, the record imports for the month of November. Also, when you look at the current financial year from April to November, it has been a 49% of a jump as compared to previous year. So, well, yes, there's a problem with trade deficit, and that also has impacted Indian rupee, and that would make imports costlier going forward. So it really seems to be turning into a cycle here. But I want to take you through on what really we do in sense of November when it comes to imports. And well, yes, it is a record. When you look at all of those previous years, it has been a double-digit tons in sense of gold import. But for the month of November in 2024, we've seen 173 tons. And this is the Ministry of Commerce data there. I also want to take you through last many years on the kind of imports that we've done. Let me remind you that 2020 was a COVID year, is the reason you're looking at a smaller number. 21 was a vengeance buying. And then the 2 years after that, we've seen in the tune of 700s there. And this year, 800 ton plus kind of imports is what we are looking at. I also want to take you through on the reasons why we've seen such strong gold imports. Well, one, it is festival season. Always the last quarter of calendar year does see higher imports. And then also there are 48 lakh weddings this time around until mid of Jan. That import seems to be happening. There's strong investment demand also. Remember, gold has given you 30% of returns in this year itself. So portfolio diversification has been on the higher side. Markets also have reacted to import duty cut from 15 to 6%. And that led to a lot of buying into gold. Also, remember, a lot of unofficial and smuggled gold used to come into India to the tune of 150 to 200 tons. That also has found its way via the white channel. So those numbers also are now reflecting within this number. The other thing is about hallmark jewelry. Remember, you have many IPOs coming in, more corporates are now getting into jewelry. There's more credibility, transparency here. So that also has led to more jewelry buying into the markets there. But when you look at the overall numbers right now, there's a bit of a dissent when it comes from the industry. So while the Ministry of Commerce has put out a number at 173 tons for the month of November, Metal Focus, which is an agency which provides data and collects data from 9 countries, also is a source of data for World Gold Council, has put that number to 136. So these are the numbers that the industry still is debating on. But even with 136, we are pretty much on the higher side.
This Indian November 2024 gold import reporting discrepancy doesn't really shake the trend, nor the main point I am making here, even if we use the lower number. We're looking at the 21st century Indian gold import data month by month. It would still be high. And that's in the face of record nominal price highs nearly everywhere in the world and at home in India too. They're buying bullion and gold in bulk. And we can bet China will be too. They love a spot price dip and are certainly concerned their local fiat currency is going to be devaluing further to come. I personally believe, given the fundamental situation for bullion in place and in the years to come, the old 1970s Western-led gold bull on the left-hand side of this chart will end up being echoed as this decade plays out into the next for us in the 2020s and the 2030s. But this time, it will be a worldwide affair, with many Easterners gaining purchasing power versus typically no to low bullion and high-grade jewelry owning Westerners. The runway for a coming mania phase remains ahead. That will be all for our weekly SD Bullion Market Update. Merry Christmas and Happy Holidays to all of you out there. And as always, take great care of yourselves and those you love.
If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.